Yo, how's everyone doing? It's Mr. Anderson, True Crypto 28 here on Twitter. So today, we're gonna focus specifically on some scalping on the 5-minute chart. I'm gonna try to be sort of fast, but I say that, but I know it's not gonna be like a 5-minute video. So when I say fast, I mean I'm gonna speak fast because I know I have a lot to get through, right? Ultimately, we're gonna use True Vibration 2.0. Majority of people that are already using it, this is for you to help you out, but of course there's plenty of people that haven't that are going to be taking a look, so I get it. So for you, just contact me on Twitter via direct message if there's an interest in looking at it. It's no cost out of pocket or anything along those lines, but call me, DM me on that. But the thing is that this particular day we're going to go ahead and utilize one of the features, which is called DBI, Directional Bias Indicator. Okay, and very specifically we're going to talk about scalping, utilizing a 5-minute chart, and an active DBI, which I'll explain in a minute. So I'm going to clear this out in a minute, but feel free to write this down, take some notes if you like. Probably would be a good idea. What are we going to use? We're going to use that 5-minute. I'm actually going to use it with an active 30-minute DBI. Okay, but I can switch that up a number of different ways, and so can you, obviously, so you can make those choices. The idea here is that it's not going to be just those two things. There's going to be a confluence, okay? And you'll see I have a whole variety of things here. What is confluence? When you have a few different setups or reasons for your entry, right? So we're going to talk about 5-minute trigger. That's the trade that you're taking the actual trade on. 30-minute anchor. Very low time frame, right? And I'll talk about this. I'm going to assume that you have some background in technical analysis, or else I might lose you. If I do, I apologize. But I'm going to make the assumption that the crowd that I'm speaking to has some concept of technical analysis, and if not, most of the stuff that I speak about can be Googled. There's not a whole lot that's new under the sun, right? It's more about, can you come up with a system that you yourself can understand, you yourself can trade, you yourself can follow, right? That's the key, consistency. And if you can do that, you're going to develop a stronger system within your own system, if that makes sense. The whole point is that that consistency is what's going to allow you to see little mistakes that are made over time. Problem is that a lot of people aren't consistent at all. They don't really know what they're doing within their own concepts, meaning they might understand 70% of it. They don't realize that 30% is really just throwing their whole game off. So regardless, let's just kind of go a little bit forward here and explain the fact that I said I'm going to use confluence. So not only do I want to have the signals that I'm going to show you, but I want a variety of more than one of the following. A swing failure pattern. On the low time frame, by the way, whatever my trigger is, okay? A failure pattern, which I'll show you in a minute. Remember, not all of them, just some variety of versions of this, okay? That's what I'm looking for. A local high or a local low. So you'll see this in a minute. And I'm giving so much, right? The reason why is that, well, let me just explain and then I'll give you the reason why. Divergence, right? Whether that's on my indicator, the True Vibration indicator, or any indicator of your choice that makes your heart go pitter-pat. True Vibration, qualified, pivot, long or short. If you don't understand that, I'm going to show you that in a minute. But for those that get it, you know what I'm talking about. Then it says and or. So I either want one or a couple of these and a signal from a momentum indicator of your choice, right? Which I'll explain that in a minute as well. I have a bunch of them already laid out on the screen. It's going to look crazy. But I'm doing it with a purpose. Why? Why am I going to do that? Well, after that, we'll do a bonus look on this directional bias indicator, and you'll understand why. But ultimately, here we are, 5-minute chart, and I'm going to have a crazy looking screen here, right? I got, just so you know, this is slow stochastic, because some people like to use slow stochastic, right? This is my indicator. It's called True Vibration. The purple line here is called FSR. The yellow line is called Smooth Vibration. The coloring you're seeing is fill or momentum indicators, etc. And then there's signals. These signals basically, without going too much detail, because I know a lot of you guys are going to know this, but this is basically a pivot long or short, and then there's a little very simple strategy to this to understand what a qualified pivot long or short is. A qualified would be if you can go green and then see a pink in between, or in this case, just a green, then see a red right down, so up, down, and then green again. So if this was my signal, I need the previous green to have, first of all, a down arrow in between, and I need it to be lower. It's low of its recent structure, so in this case, right here. If it was this candle, it would still be here because this is the low of this little range right there, right? So I just need this to be lower than this. That's it. And that's what would make it qualified. If this was lower, then it's unqualified, and that would mean I would actually go to a lower time frame, which we're not going to mess with at all right now. But in this case, we're only looking at qualifieds for the most part. Another thing about that is that, because especially since we're on such a low time frame, so you understand, you might see something like this where you go green, red, red. So you could have technically a failed signal. Keep in mind we're in 5 minutes, so you can see a lot of that. But you're going to have a failed signal, and this is the most basic signal in the world, by the way. This is the least of the signals that are involved in the system. But the point is if you see that one and then another one to follow it, this one is also qualified, right? Because you basically just had a situation probably where the 10-minute or the 15-minute, since we're on the 5-minute, was working towards some exhaustion. So you don't want to unqualify yourself based on the fact that you never reset, right? So this is a reset, would be all the way down, and you would have to see that green again. Probably spend way too much time on that, but I do want people to kind of understand, because I'm going to run through a lot of things. What else is on the screen? So this is very important. This is when you go into True Vibration, you can see that this is what it normally would look like. But I have directional bias indicator on off, and this one is MTF, multi-time frame directional bias indicator. You can click on that. It's on. Down here is the time frame that you choose. I've already choose the 30-minute. That's what we're working on. I'll change it a little bit later to show you. There's many more functions. This thing is very detailed, right? But regardless, this is one of the concepts. And what's the idea? Well, the idea of the directional bias indicator is that you're looking for majority of your trades to be in that direction. And it's really meant to be on the daily. But what I noticed years ago is that I could bring it down to lower time frames and do a lot of different things with it as well. And the concept on the daily would be that once green, you would look for longs until you saw red, which means it could be green and then go off. And then ultimately, you'd still know that the greater edge will lie with longs in that situation until you then see red. But it's a little different on the lower time frame. Not that the definitions are different or anything along those lines. It's just that we're specifically going to look at active red or active green. And in a situation of active red, we're looking for only shorts. In a situation of active green, we're looking for only longs. And I'm going to go through, I'm actually going to ignore so many elements that you would normally look into. Like, for instance, what would you normally look into? Of course, you're going to look at like your daily horizontals of open and close, or certainly your pivot points, your resistance, support resistance, things like that. You might even have your 4-hour mapped out. You might have a naked POC. You might like your VWAPs. It's whatever you want, right? In fact, the biggest part of this, which is why I kind of explained things the way I did earlier, is that this will improve whatever you're doing. Now, we're talking about scalping first, but whatever system you like to use for your scalping, I am very confident that having this little green, red element here would improve your system. So if you already have one that you like, feel free to keep on using it, or whatever it is that you like. That's why I have all of these up here, because you don't need all of this. You just need what you use, right? I'm actually bringing all of this craziness on here because I want you to see that almost anything will work, right, in this situation. I'm not going to cherry pick. And I'm also not even in this case looking at the higher time frame DBI. Because what I mean by that is if I had a daily scale green, right, meaning I'm looking for longs, and a 4-hour green under that, or a 30-minute green under that, that's even more confluence, if that makes sense to you, okay? So I might be countering trend this entire time, and I'm actually ignoring it and not even paying attention to that right now, okay? Why? You might say, well, why aren't you doing it? Well, because I don't want this to be a 2-hour video, and I want to show a simplified way, and you're going to see that, no doubt, this will work. Now, the one key element here as well that I'm always going to do on a very low time frame, as we're just going to jump in and give some examples, is going to be trend lines. I'm always looking at a trend line. So if I'm looking for longs, I'm going to go to the top of a range and draw a trend line just so I know where it's at. And then a break of that trend line would be one of the points that I want. Remember, I said I want multiple elements of confluence involved. It doesn't have to be specific. It doesn't have to be swing failure with trend line break, or local low with a failure or anything along those lines. It can just be a couple elements, right? And on one side, I need some signal from a momentum indicator. On the other, it would be nice to have a swing failure. It would be nice to certainly have a hidden divergence or something along those lines to go along with it, okay? So I know I ran through a lot, but now we're finally getting into it. So what is this one? This one is Stoch RSI. I don't ever trade with Stoch RSI in my life. However, I'm going to show it today, just again show you that you can use anything. It doesn't have to be my tools. People seem to like Stoch RSI, so we're going to kind of look at it. What I'm going to look at right now, I have the yellow line is the leading. I'm only going to look at bear crosses where the yellow line goes under 80 as a signal, and then bull crosses where the yellow line goes above 80. Excuse me, above 20 as a signal. So that's what this one is. This is Stoch RSI. Because I'm going to refer to a bunch of different things here as I fly through a whole lot of these, okay? This happens to be another DBI, but it's on the 5-minute. We don't really need it right now, but that's up there for whatever reason. This I'll address a little bit later when I show you another trick. This one is slow stochastic. Same rules for slow stochastic. You don't have to know anything about it. All I'm going to utilize here is crosses, the blue crossing over to, and I can change the color. Let's just make it yellow also, just so that everything looks the same. Just change, I'm going to change my percentage K to yellow, and in this case, it's just going to be the yellow crosses. So the yellow crosses, so it's easier for me to see, under 80. So I need a cross, and I need the yellow to go under 80, and that's what I'll use as part of the signal. Okay, so whether I use Stoch, or Stoch RSI, or RSI, or True Vibration here. Within True Vibration, this is FSR, and this is Smooth Vibration that I mentioned earlier, and this one is one hell of a tool, which you'll find out that in a minute. Okay, so what happens here? Finally, I'm going to write in a note. I know this is a huge setup, but I think the payoff will be worth it. So M30, here we go. I know a lot of my guys have just been dying to kind of get their hands on the DBI type of strategies, right? Some guys kind of picked up on it naturally, which is great. But it's also understandable if you didn't, so don't worry. So a couple different things. One, I might just come in if I'm green. So what would happen? I would set an alert, whatever I like. Remember, later on I'll show you what it looks like on the 4-hour, the 12-hour, the daily. But right now we're just doing M30. Maybe you came in, looked at your top 10, whether it's alts or assets that you like, or maybe you found assets that were a little bit hotter, whatever it might be. I'm actually going to a time frame that's more choppy, intentional. I want to find a lot of issues with this. But the point is, once it happens, what I'm going to start doing is I see, all right, so I'm green here. First thing I would do is I would draw a trend line. Okay, now you can do this if you want. I think you should. It does help to have some element of confluence, because one of the main reasons I'll do this here, just as an example, is if I got some sort of signal here, that signal potentially needs to be closed as you enter into the trend line. So if the trend line is not either close enough to break or far enough to make it worthwhile to trade into the trend line, then you probably will not take that trade. Okay, so I'm always aware of how that's going to look. If you're lost on drawing trend lines, maybe don't try too much. Study it a little bit and then kind of go from there. But literally, I'm only going the top to the next top that I see and running it through. Nothing special from there. And this would have broken at this point. And what I'm going to start to do mainly, my main element that I'm going to do when I know I'm either green or red, this is called active green or active red, is I'm going to look for divergence. And I'm going to compare divergent points where at least one of my FSR, or which is the purple line, or yellow smooth vibrations here is crossing below 30. That's this blue line, or above 70 if I'm looking for shorts, okay? And I'm going to compare what I call resets, this spot to the next time it occurs. Now, if it only went to 30, I would have been okay with that. You can get into different types of divergences within. I get it, but just for this conversation, let's just stick, because it's easier for everyone to see and acknowledge that, yes, this clearly came below that level. So did this. Let's compare those 2 points, okay? So immediately speaking, that's for distance, right? So if I'm comparing 2 points like that, I want to find that. But I'm also going to have elements where I'm seeing some other type of trigger, and I might want to see if there's a tight divergence. Tight divergence is just as useful, of course, as well. So I'll look for that. But I'm also going to kind of rush through it now. So you'll have to take my word and also know that I'm never one to try to take extra credit. You're going to lose trades. That's trading. Any professional understands that. So get used to it. It's just finding enough edge to understand, like, okay, well, when my loss comes, I'm going to take it like a man. Okay? So here we go. Very quickly, I'm actually going to just show you things like this. Okay? And then we'll kind of talk about how the confluence element works. Now, I did say we want confluence, right? But without the confluence, let's just look at the Stoke RSI down here, which I've already explained that I literally never use, right? So all I'm going to look at is bull crosses coming from underneath the 20 level, and I'm just marking them off, and then we'll look at them in a minute. Okay, I think that one counts, right? Active green. I don't even know where price is, so I'm not looking at it. I'm not cherry picking or anything like that. And then as we kind of retrace, we'll review to see how these did. And then I'll also show you how the confluence changes, because you wouldn't just choose these, but you'll notice that there's times when you can, right? And here. And here. So you notice I'm not cherry picking. I'm not saying, oh, this one's better than the other. I'm actually going to go through. I'll find out where price is. I'm sure some will be bad. That happens. Okay, so here we go. Active green on a 5-minute chart, which is choppy as hell. First signal. Now, look at that. I'm breaking a trend line. Good. Okay, so this would have been a signal. Normally on any type of scalp, you're looking either to see one breakout higher or a swing to the top of your range. Also, within 3 to 8 candles, when you start getting beyond that, you better be in a runner because it puts you into a position to where otherwise the story's already changed and you really need that new data and paying attention to what's going on. So in what we're referencing here, we have this signal here. Perfect. We are getting a couple elements already in the fact that, one, we have a cross of one of our momentum indicators, right? 2, we're in a situation to what? You basically are about to break a trend line. Forgive me, let me clear that out. So, little trade here, nothing crazy, but you see general motion's up. That's great. Let's go to the next one here. This is one of these pivot longs that we discussed, right? So it happens to come earlier than the Stoke RSI, but whether it was this long or that one, what ends up happening is you break up from that range. Now, it went sideways. I don't know if you would have hung out in this, right? But if you would have, because there wasn't also a reason to exactly leave, right? So, I mean, ultimately, you would have naturally came in and said, hey, okay, here's my first pivot. So I pivoted here. And normally on these low time frames, I'll take the wick of the pivot just in case. And I want to wait till I close under that to be a little bit concerned. So there's a very reasonable reason why you would have stayed in this, right? Because nothing actually happened. But I also understand that this might have been a little long in the tooth for a lot of people on a scalp, and they might have gotten out. Either way, you either would have had to jump up, great. And then eventually, nice run up from this standpoint as well. We do see another cross here, right? So this is the momentum that we're talking about. Now, again, I'm not going to say that you should have taken this trade, but utilizing the true vibration, this does count as one of these scenarios we're talking about where you got a reset again and a local low. What is a local low? Just means you have a candle that's closing above the previous candle, right? So outside of its range, and you're in a situation to where you see that here. So you could have had a long there as well, and then you start rolling with it. Because you had a combination of a couple signals, right? Whether you decide to take that, one's up to you. With all of these, it's the same thing, right? It's always going to be your determination of looking and say, hey, is there enough there? Now, this signal here, the only thing that's going on is the Stoke RSI. So it does fail in the fact that I did clearly say, like, I want a combination of things, but I did want to still mark them all off. And this is good to know anyway, because if that happens, the key point is you're going to go back to your base of your range. You're going to say 1 ATR below that, and maybe you lose a trade, and that's fine. What happens? Does that change your perspective? No, it's still solid green. I'm getting another pivot long signal here, another cross on the Stoke RSI. So now I have a couple things going on. I got the pivot, I got the Stoke. I also am in a situation to where I clearly reset again, which is what printed the signal. Let me get a little water here. But there's one key element that I really like, okay? And the key element that I do like here is that when I get a combination of this solid green, right, and a hidden divergence. You see the hidden divergence? So I got a hidden divergence, and then we burst up from there. So yes, this is an absolute winner of what we want because there's the confluence that we're talking about. And then look, climb up. Good job. Now we get another signal right there, as I mentioned. Now, the true vibration signal is getting a little cleaner, right? And that it's quicker. Now, this one, you don't have the divergence, but you do have the qualified true vibration signal, right? So the true vibration qualified signal. Why? Because this one is higher than this one. But in this case, guess what happens? Not a whole lot, right? So you would have longed here. And in all honesty, this one's probably one you're taking a loss on. But I just wanted to point out, so we're fair. The thing that happens here, though, is that you see you end up in a situation where you get this burst. But I don't know if this is one that you would have got into. I mean, ultimately, it just happens to be this, what I would classify this as just the wrong time frame. On a 10-minute, it's a definite signal that you catch. But it's one of those situations that technically, by the rules, this is not qualified. So from that standpoint, let's just act like we didn't get that one. Good with that as well. Next signal is right here. What happens? I'm just basic Stoke RSI cross. One thing I should have been pointing out here as well that I haven't been looking at is the stochastic, slow stochastic right here. Anytime I get this stochastic reset, I actually do like these as well. especially even on this low 5 minute, when I'm above the 200. That red line you see here, that's only EMA here. If I'm above the 200, I'm getting my green here, and I'm getting this signal, meaning a bull crossing, slow stochastic. That's actually going to be a pretty damn good signal, right? Sometimes you'll get one more divergence like here. So actually, even though I gave you that information before where I said you might not have caught this one, in all honesty, now that I look at it, I would have, but I can understand why others would not. I would definitely take this signal because this is a stochastic oversold play that all my guys kind of know about, that we do for sure. And it's a definite yes when you get this. So even if I lose this one, I don't mind taking the next one. In fact, I probably feel better about it because I'm still in a position to where I'm understanding, and you may not understand that just yet, so don't worry. But you'll get to a point where you understand, like, oh, wait a second. I'm on the 5 minute, and it's the 10 minute or 15 minute that's looking to get that oversold, or we're getting one more divergence in between. And a lot of times it almost strengthens that next one. So when you know what you're doing, you're not so worried about taking the next one after that. In fact, you know that, hey, I paid the price here so that I can enjoy that next one. Okay? So you see, we did have like one, maybe count it 2 losers if we want it, but the rest of them did quite well in that little range. Now, let's just continue on. And this is the thing I like too. So you'll jump into a signal, it turns green. Well, guess what? There was no signal here except for this guy here. Little one, some confluence there, which is fine. It took you, in a lot of these I'm not zoomed in on, so we should zoom in to kind of really give you the real picture. But it gave you one signal only, and it was 47,037 to 47,189. You know, you're not changing the world, but it's $150 before it started to back off. So it's definitely one you made money on. You would have definitely either sold into that. You should have, as you're rising up, taking some profits, 25%, something like that, as you run into, as you start off and see a little percentage gain. You got to pay yourself. The reason for that is in crypto, there are certain fees. So I would definitely recommend paying yourself constantly throughout a trade. Whereas, myself, I always actually treat every trade as split in two. Every trade is half scalp, and even if I had a higher time frame look at it. So if I wanted to pay, took a $1,000 trade, just use a round number, I would probably do it as a 2,000 or 2,500s, where the first 500 I'm literally selling super fast. It's going to cover my expenses, because very often, at least for me, I do find that it's very rare that a trade goes completely against me right away. Just thank God. And what I'm showing you is a system that not too many are going to go completely against you right away also. So if you get in the habit of taking those small profits, they start to pay off, especially when you lose a trade. You don't really feel it, right? You might even see that you had small wins along the way. But the point is here, this one looks pretty bad, right, structurally. So even though that's the case, we still got a signal that took us to a profitable trade. In this situation, like I said, you'll have plenty that lose. What ends up happening? We wait till the next green. All right, we get an alert. Here you go. Guess what? Signal, cross. Where's my guy right there, which is right there. So again, Stoke RSI, like I said, it's not one I really use, but it is a little bit later than my tool right there, which is a pivot low, which is actually designed to be a little late too, because it's accounting for a local low. But regardless, I got a local low, right? And there's that divergence situation again, right? So I'm always going to be looking in those circumstances. Oops, that's not what I want. And again, you should do a trend line. You should have whatever normal support resistance you typically look at, etc. It's very normal. So no matter where I look at here, this one went deeper. You don't have to get so specific with it. But the idea is it's a clear hidden divergence, and that's a definite signal, right? So if I get a hidden along with an active green within a true vibration pivot long signal, this is a trade that has an unbelievable hit rate, right? So there you go. You run it up. What more could you ask for in a scalp in that situation? What happens? A few minutes later, we hold the low. Is it qualified? It absolutely is. You don't get the divergence, but you get the reset that you're looking for. You are active green. And then again, you get that same cross and Stoke RSI. Remember, you don't have to have all these here. You could have one of them. You can only use True Vibration if you want. Maybe you can only use Stoch RSI. Maybe you like RSI. I'm not even looking specifically into the RSI plays because I don't want this video to go too long. You could also just use Stochastic or whatever your heart desires, but it would be a momentum indicator of your choice to go along and help this package. So that's up to you. Don't do all of these. Don't have 20 on the screen. This is crazy. I would never trade like this, but I just want to make a point here that it doesn't matter. They're all working, if you haven't noticed, right? So it doesn't really matter. And you also notice it doesn't matter if we're long or we're short. So here we go again. you don't have the divergence element, but you know there's a continuation element. That's a mentality you have to get into and understand. Like, hey, wait a second, maybe I'm getting myself into a trend. So there you go. There, then to there. Another one. This is a beautiful long. Again, I would have sold some into it. Maybe by the time I get near that range, I'm already out anyway. That happens too. Guess what? Another reset. Remember, every single time this happens, I would be drawing myself some sort of trend line of some sort just to wait to see if I get a break. I'm going from top to top, something like this. I know a lot of you are probably looking at this very small with everything on the screen. It's necessary because it's going to help you show that I'm not making anything up. This doesn't repaint or anything along those lines. The only thing it might do sometimes is depending on where you're, see it's 7:30, so that starts there. But because you're on a 30-minute chart, so every once in a while, let's say the 30-minute might have turned green here as an example, and it might go back till the official 30 minutes began on the chart. And if that happens, my apologies, you'll see it in real time though, so it wouldn't matter. Technically, if we put the replay on, we can check that, but it's not enough that it matters. So trust me, all of these are hitting, okay? So here we go. Same thing right there. What do we have? Another signal, another awesome scalp in that situation, right? Now, I'm probably going to do a few extended videos of this because I could see where this could go 1-2 hours on the exact same topic, maybe a couple different times, in all honesty. So if you feel like I'm rushing through it, try to watch it back a few times and let it sink in. But there's a lot of valuable stuff going. So what happens now? I want to show you something interesting. So we had a couple things. So this is basic kind of like TA 101 here, which is, so here I am getting long into this scenario where I've had several winners, right? They've worked out great on scalps. Hopefully it just goes to the moon, of course, but notice what happens here. We enter a situation to where this tool is very nice in that you see how the significant divergence is coming in along the way before you get this pullback. So it's just an awareness element to kind of keep an eye like, oh, okay, why did I get higher high, lower high, higher high, lower high again before the nice pullback? Okay, but either way, I'm not changing my rules. I'm still looking for longs. And if I took this one as well, it is a winner, right? If we look at the right way of how it is. It did win, but it flexed itself through. And then eventually got hit, and you probably might have gotten caught in the midst of that and had to take your stop on the remaining portion of your position. But the key thing here that I would point out is that you would probably have some insight and understanding of like, all right, well, we did see a little bit more of an aggressive breakdown. We did start to see some struggling there. Now, don't overthink this. This is a little bit more advanced, so don't worry. I wouldn't get into that just yet, right, for yourself. But if you're someone that's already a pretty decent trader, I just want to show you how that can kind of play in. And then what happens here is that you end up actually seeing a lower high, right? So this is a lower high when that occurs. So this is why this eventually just kind of peters out, because the actual trend on that low time frame is petering out a little bit as well. Let me take a drink of water, sorry. Anyway, either way, it's a good gift that likes to keep on giving, because right at the end, before the signal goes out, we get one more. You would have been one ATR below the recent pivot. Sometimes, you might have to have a smaller position when you take these, or you may choose not to take them. So I understand that if some run away, you may not jump in, but once that candle closes, one ATR below that level, and you can see this one would have taken a little time, but either way, you either got a small profit or half decent one before getting yourself out. Now, at this point, the signal's off, so there are good signals in here, but that's not what we're looking at today. I'm only going to do a few more on this low time frame because I think you're probably getting the kind of getting an understanding of what I'm doing. Now, I will show you this. What am I going to do? I've been showing you that when we're green, right? Don't forget that when we're green, we're doing a trend line from the top. But when we're red, you want to do that trend line obviously from the bottom, right? So in that situation, it's like, all right, well, a lot of times you'll roll into this red and you're going to wait for it to bounce. But this guy probably needs to clear over here for market structure, probably above that to even change things up. So ultimately, just kind of keep that in mind. But I'll draw in that trend line just to see if we get something. And in this particular situation, you end up getting a signal here. And it is qualified. But I want to see, is there any confluence? Well, you see we didn't get that cross that we discussed under 80 here with that as well. So I'm not saying you wouldn't have taken it, but you're not having the confluence element that I discussed. You're also threatening that 200. And anytime you're too close to the 200 there, you can expect some chop. So does it really give you a signal? Not really, right? You don't get the confluence of signals there. But let's just say you took that anyway, and it would just be a small loss, right? That's trading. But ultimately, I do like that you'll see that, hey, a lot of these times without obviously seeing confluence, and in fact, you do see here a divergence. So this one would be a signal, and it is qualified because you did go, there was no green in between these two. So this one here is a qualified signal at that point. It doesn't go too far, but it is actually a small winner now that I see it, because you do have the divergence between these 2 points. You see how you have the FSR going lower as the price action goes higher. So you do have now that confluence of divergence with some other signal. Then eventually you had your trend line break. You might have started to feel decent about it, and probably when you look at this, especially when I consider the trend line break, this thing might have came back and maybe you're a break even. So it might not be a winner, but maybe you sold some into the run. Again, I'm never trying to take extra credit for anything. Now I'll actually just kind of scan through again just so you see where I'm at. Obviously, you can see that when there's significant confluence, you're going to have a very high hit rate, but let's just run through them all again. So now green on green, right? So you see signal up, right? This last signal, obviously not up, so that's either a loser or possibly unqualified if there wasn't confluence, but I'm just showing you a little bit of everything as I mentioned. Then again, the confluence element right there, the divergence element right there, that's your signal. It happens again where you start to come in. Now this is still green. I do want to show you this part here because I like when this happens where you have, let's see, okay, little area like this, you have this little zone, and what is that? That's a tight divergence right there. So I like the tight divergence, absolutely. Local low once this candle pops up. Just the fact that it didn't print the color, that's just the way that things coded. Technically it met the criteria. It's just that the look back period we have to use has to be minimized just in case, but that is a local low, right? Because I'm higher than the previous candle right there. After receiving a divergence, it's the exact signal we want, and of course you can see it's a very, very good scalp, right? So these are all pretty damn good scalps here. This one would be unqualified because of the positioning, because it's lower than the previous, right? Whether you consider this one or that one. So it is unqualified, but ultimately, you can see it ran up as well. If you decide to take it for whatever reason, it's completely up to you, meaning maybe you looked at this cross right there, or this cross right there. That's up to you. This one I wouldn't be looking at unless I was above the 200. And again, I'm probably a little too close to the 200 on that one anyway. Then what happens? Back to red, so we're looking for shorts already, right? Now again, use your TA. Maybe you don't want to look for shorts. Maybe you think it's a long only day. Of course, those things play a factor. But just to kind of run through, because I think I've shown you enough of how the confluence works well, you would have short, 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 short. These are scalps, so you can see they're doing pretty damn well if they qualified. And then, of course, if they had divergence on top of them, those are the ones that are obviously going to be even a little bit better, like this one right here. So you see the divergence that came in, and eventually you have yourself a nice little scalp there as well. Now, I don't want to go too far into this, right? Because you could be here all day. I might show you one other element here. Let's see. I don't, obviously that one took off. That's great. So you'll see some takeoffs. If I could find, probably should change. So here's what I'm going to do. I'm going to change to something. I'm going to cheat, right? I'm going to go to something like Sol, right? Which a lot of people at the time of me making this probably have an understanding as to what kind of stuff this has done. But the reason I'm cheating is for a reason. So although, yeah, I am cheating by taking something that really took off recently, I'm going to tell you what you can do. You can go and use whatever tool you like to find strong assets, right? Strong stocks, cryptos, coins, whatever it is. That I don't know. I'm not going to name off a bunch, right? This here, so you have an understanding, is a tool that I use that's called Fast Break, right? So Fast Break. Now, Fast Break, green is a signal on a daily scale that tells me that that thing can go. Yellow is like the extraordinary one. Now, when you see this turn dark, that means that, yeah, it's sort of still up in that territory where it can go, but at the moment it's reversing, right? Same thing. So anytime you see the dark shading, that's what that means. So I'm going to use that currently for this example, right? So for this example, I'm going to use my tool, right, which is Fast Break, and I can explain that because it's actually within the True Vibration. So one day we'll do a video on that just to kind of tell you. But again, you can use Coin Market Cap and go look at the hottest coins, or use a Trading Room had a tool where you could look at very hot coins and things of that nature. Use his app, and that would work great. Look at the top 5, top 10, or maybe at the close of the previous day, you say, hey, these are the ones that are heated. I want to keep an eye on them tomorrow. Take that approach. Now, I already told you that green on mine, which this thing went green right there, right? is what I look for. Okay, so I look for green. I don't know if the 5-minute chart is going to go back that far, but we'll try. And after this, we'll change time frame. But I just want to kind of show you that if you are actively getting yourself into something that is hot, what's good about it is you're going to find that you ultimately will get the opportunity to see some real takeoffs on some of these, what are really scalps, right? 5-minute scalps, kind of a longer scalp, obviously. And you could take this, by the way, to where instead of the 30-minute, you could be on the 15-minute and drop it down to, like, I say 4 to 6 usually is a nice place. You can go 2 under, you're just not going to get a ton of signal. So say 4 to 6 time frames below. What do I mean by that? If I was on a 60-minute and I divide by 4, it's a 15-minute, right? If I divide by 6, it's a 10-minute chart. Right now I'm on a 30-minute with a 5-minute, so it's a division of 6, right? So in that situation, you basically can decide to look at it however you like, but in terms of the time frames that you are accustomed to. But what I'm going to do here is I'm coming in, because you see I'm coming into an area where it is yellow, right? And that's my tool from True Vibration that any person could have followed the same thing. It's not just about the cherry pick, it's about the yellow, right? So something that's in that yellow is an extreme. Something that's in the green is an extreme, right? So that's fine. But let's kind of go through now and zoom in, because I don't want this to go more than really 10 more minutes at most if I can avoid it. And I want to show you some of these significant takeoffs that will also occur. Because same scenario, right? So now here I am, I get a signal that says, hey, we're green. Now this thing's going to be jumping, right? Because once you get into this green and yellow stage, or whatever you're looking at, a high RSI in the daily, or whatever tools you like to use, you'll know that there's some significant volatility that's in there, and that can be a very good thing for you if you know what you're doing, right? But you'll get some of these false breaks and things of that nature. We didn't talk too much about the swing failure, so if you don't know what a swing failure is, look that up, because those are going to be some of your strongest ones, right? So where you get a swing failure within the construct, right? So we just found one right here, which I'll show you. And all a swing failure or a failure pattern is that the candle wicks below and then closes above your previous low of your range, right? Or the reverse of that for short. The failure would be that you close below it and then the next candle pops up, or even a few candles later comes back. I consider that a failure as well. Get another drink. Thanks for your patience. So here we go. So I start off with a trend line. One other thing. So let's say you get a little failure like this where your trend line breaks. I'm going to draw another trend line in that situation, and I just keep drawing them if I need to, essentially. So I might have started here, and then as I'm progressing in my trading, I'll redraw it a little bit. And again, I would never have 30 things up here like this. I'm just giving you the perspective so you can see how many different things would have worked, right? Because I'm active green. That's the key to all this. This is active green or active red, right? So here we go. Very quickly again, I'm active green. I get a signal. Okay, so there's a signal. Was this a signal that had divergence? It was. Here is my low, right? I would consider it divergence. Maybe you wouldn't, but I had a low here. If I look, I went lower with my momentum, right? Lower, and price did not. Now, price was flat here on a closing basis, which is what really matters, but the fact that I wicked, I would like that. So it's kind of a weaker divergence, but either way, this is a situation to where you are longing at 74.38, and it jumps up to a high of 75.83. I'm not saying you would have got all of that, but you get the point here. It's a winning trade, right? And then what happens? Reset. That's qualified. So one of these, this would have been another qualified play within it. You see, we're just kind of ranging, but yet we got a couple quick scalps, no problem, right? And with the scalps, again, take 25, 50% profit. Maybe you let some run a little bit. It starts to get long in the tooth. I'm probably just cutting it a little bit more and more as we go. Another qualified signal. Perfect. Here we go. Another run up into resistance. Okay. Maybe you gave some back that you weren't so happy about. I get it as well. Now watch this, because this gets tricky, right? You're in a situation here till you get another signal, but this one is definitely a little bit of a loser right there, right? Now this is one of those scenarios here where you end up having a nice burst, but technically this is not a qualified signal, right? So I don't want to make that claim at all. Beautiful move, actually, one of the biggest ones, but it would have been a move that you had to play on the 5-minute, or excuse me, on the 10-minute probably, or you were playing the breakout of your line, your trend line, which is a little dicey in how that works, but there's reasons why you might have taken it. But again, just based on the rules that we've been explaining here, let's just go with a no on the true vibration signal. But it is a yes, I don't want to confuse you, in the fact that I said if you were using other things like this, so right there would have been the signal with Stoch RSI, right? Which would have also been right there in this position as well, which would have been right here. So I skipped over a bunch of them as well. You notice that all of these are winning, right? Why are they winning? First of all, they're not all going to win. I shouldn't say that. You see, most of them are winning or a lot of them are winning. You're going to have times where you run into some chop, and if this ends up being short, right, we don't know how long or short it's going to be, you can get chopped up. So expect it. So expect chop for sure. I made a little slip of the tongue there, but my point is that it has a higher hit rate visually than you probably would have expected, right? Let's keep it going. I want to show you the same thing we were showing you before. Boom, again. Very small, right? So this one I call probably a break even. I only said boom because it's technically a signal. And then again right there, another signal. And you see that these are smaller moves, and then eventually that signal fades out. But the key here is that when I'm in something that is hot, right, performance is even going higher in this situation. And during these down times, I have no color normally, right? So that's going to happen a lot. Now this one you moved up, maybe that one caught you break even on half your position or not, hard to say, and we lost it. And then ultimately we end up going green again, and that's when you're in a real hot one, you're going to catch some absurd types of scalps that are coming in with these qualified signals, especially the ones that have a divergence like this. This is the absolute signal that we look for. Bull divergence, right? So hidden bull right there, local low, and now you're talking about a run up of 90.60 up to 94.96 in a matter of about 45 minutes. Great. Another type of signal right there. You're talking about 92.35 running up to 96.70, and the whole key is this green, active green, active green. This one also gave you a signal right there, Stoke RSI right there. Again, this absolutely is a slow stochastic symbol right